Residential market analysis and highest and best use. Help. Documents. Email instructor. CH1 market fundamentals, characteristics, and definitions. PG 46 business ownership. Notes print. Business ownership. Business ownership. This type of ownership is normally a concurrent form of ownership for non-residential properties. The business entity may be titled in a different way than those forms already mentioned here. Sole proprietor, also known as sole owner. This type of ownership indicates that one person owns and holds title to the property. Partnership. Non-residential properties may be titled in the name of the partnership and may be identified as a limited liability partnership, LLP. In a general partnership, all the partners share in gains and losses, and each has personal and unlimited responsibility for all liabilities. In a limited partnership, there are both general and limited partners. The general partners manage the business and assume full liability for any partnership debt. The limited partners are passive and are liable only to the extent of their own capital contributions. Corporation. It has been mentioned that cooperatives are owned by a corporation. A corporation, being duly registered in its state of incorporation, is classified as a standalone entity and has all of the rights of ownership found in other types of ownership. The corporation can be held accountable for building code violations, adherence to the police power, etc., and is taxed accordingly. Corporations can be identified as limited liability corporations, LLC. They are normally managed by an elected board of directors. Land trust. This is defined in the Dictionary of Real Estate Appraisal, 6th edition, as a legal vehicle for partial ownership interests in real estate, in which independently owned properties are conveyed to a trustee, may be used to effect a profitable assemblage, or in some cases to facilitate the assigning of property as collateral for a loan. Real Estate Investment Trust, REIT, that is defined in the same dictionary, as a corporation, or trust that combines the capital of many investors to acquire or provide financing for all forms of real property. A REIT serves much like a mutual fund for real property. Its shares are freely traded, often on a major stock exchange. To qualify for the favorable tax treatment currently accorded such trusts, 90% of the taxable income of a REIT must be distributed among its shareholders, who must number at least 100 investors. No fewer than 5 investors can own more than 50% of the value of the REIT during the last half of each taxable year. The Federal Securities and Exchange Commission stipulates that REITs with over 300 investors have to make their financial statements public. End of page. Chapter start. 29%.